Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday, the 18th of November, 2022. Can you believe Thanksgiving's right in front of us? You're going to have an abbreviated trading week. It'll be normal Monday and Tuesday, abnormal Wednesday, the day before. A lot of traders will leave. They'll be going to family, whatever, and people's mind get out of the market. But Wednesday is a real important day. It is the FOMC minutes. And what it's going to do is I think it's going to shake the naysayers, those that are saying, oh, the Fed's going to pivot. If you've watched Fed Talk, and if you read my newsletter, I write a section called Fed Talk. And I give the highlights of what each Fed speaker is saying because I'm looking to see where they're veering away from the Fed chair. They're not. They're in unison with him right now. They're going for another rate hike. They want to see the December numbers. The odds favor it's going to be a 50 basis point hike unless you get a big surprise out of the jobs data and the CPI numbers and the PCE numbers. You're going to get all these coming out at you in front of the December meeting. After that, we don't have a January meeting. You have a February meeting. That'll be crazy, because that is where the pivoters are going to come out. Right now, I think they're going to be put back into their jar in the next, let's say the next two trading sessions by Tuesday. So be a little careful. And with that, be a little cautious in holding dollar shorts after Monday. That's my thought process, at least. And I've given you the reasons why. Another market you got to pay attention to is you're letting go to the downside on the energies. The world is contracting. It's country upon country doing many things, including the tightening of the screws of interest rates, fighting the inflation, hurting demand to do that, and it slows it down. Today, I was sent by one of my clients a notice that very quietly China has asked Saudi Arabia not to send them as much oil. Okay, why don't they do that to Russia? Because they're the ones buying the oil and helping the war effort from Russia, but they did it with the others, and probably because Russia's OPEC plus, one of their members. It's easier to do it with the Saudis, and that was the word that happened. Now, you did bounce off the lows. The market broke pretty hard on that news. It came back a bit from that. When I look at these charts, first we'll look at a monthly chart of closes of the S&P. You still have a very clear pattern of lower highs, lower break lows. You're getting a bounce. Okay, for the month, you're up 2.34%. When you come to a weekly chart of closes, I felt like the week was an up week. I don't know why, but it wasn't. It finished off down 0.66%. And what the market has done is it's gotten up to the 18-week average of closing prices in red. I call that moving average of closes, MAC, and it's sort of stuck right here. But the momentum's been up. You can see the flip-flop of the weekly chart. You've been making spike lows and higher highs. I respect that. When we come to just a bar chart with nothing on it, and you start putting on the first study, and this is how I teach, by the way, in my full charting course. There's only 5 different indicators I use. I believe that if the more indicators you put on a chart, the more confused you get. Second, make the indicators work well with themselves. You don't need an MACD and a slow stochastic and an RSI, okay? But when I set up the swing line and I wrote this study, what it does is it tells me where market peaks and valleys are. And if you believe that a trend is made up of, in a bull trend, higher highs, lower lows, and a bear trend, lower highs, lower lows, you have to have a way to find them. And you need to create an indicator that can happen all the time. If it's just you pointing at the chart and there's nothing behind that other than you think it, it's not real. You got to be able to replicate it over and over. The swing line does that. So you're in a downtrend unless you take out 41.58. As I told you, moving averages are important. One thing to always remember is the length of an average. When you're looking at a weekly chart and you get a 200-week moving average, you have 4 years of chart data there. Yeah, 4 years. That's real big. So when you come down and you challenge it for the first time, no, you don't want to be pressing it under that. Let the amateurs do that. The pros are coming out of shorts right there. Always important to remember that. Does it mean the market can't slice through it and go through it? No, that can happen. You go look at the probabilities of it and you come to your own conclusion. Now, on the way up from there, the neutral line on a chart, the way I teach charting in my course, is either the 18-day moving average, the 18-month, or the 18-week. It's this number. And for 4 weeks, you've been hanging at that number. So the bounce is carried here, and I think the market has spent itself a little bit. The market had gotten down to the Bollinger Band. What's the importance of that? These black lines will keep the market trading within it 95% of the time. You don't want to go to 100% in the reading. It'll never hit it. You don't want to go where it gets too soon in front of it. It doesn't work that way. You want to be with the herd. Yeah, you want to be with the herd that uses it, but I put my own twist on it. So you get to the combination of a Bollinger Band and especially a 200-week average together, run, don't walk, run out of your position. The trend had been down and look at the bounce. Now we're waiting to see what next. You restart the bear trend if you take out this week's low and close under 39.2614. That would then make me shift this red arrow all the way to there. If that doesn't occur and you get up to 41.58 through that number, I don't have a downtrend anymore. What about putting all three together? Momentum, bias, downtrend. Bias is determined where the market is in relation on a weekly chart to the 18-week moving average of closes. If you close over it, your bias should be up. It is a filter on the swing line. The momentum is pointing up. But if the swing line is down, you have one of the three elements of a trend still pointing down, therefore you have nothing. Do we understand that? Nothing. So when I look at this chart, there is no trend. It's just hanging in here, a lot of noise right now. I have the same pattern in the Dow? No, I don't. If you take a look at the Dow, we can come back just a little bit here, very important. The market came up, got through this right here. Prior to that, now I'm going to come back a little bit for you, you had the pattern of lower highs, lower lows. Where did the market go? The 200-week in the Bollinger Band. I'm not going to go and say everything I just did, but there's the key. Now you're coming back just like you did in the S&P to the 18-week, and you get through this number. Okay. Just like I said in the S&P, if you get through it, then you can go to the next series of numbers. In this particular case, it's the 100-week in the upper Bollinger Band. Well, you can see you're knocking on the door. And there you go. All right? So, again, where is this market? It's bullish. And the daily chart is still bullish. But I question if the market's not going to be between here and the Bollinger Band running out of momentum. You're already up to the point where you've got one of the numbers over on this number 80 at this point. Anything over 70 gets my attention. I think that you've got to be careful with that. Then let's go to the NASDAQ. We have a pattern of higher lows, higher highs. That noise in the background, my phone, it's going to ring a little bit. I can't change it. I'm not there. This is neutral. You negated the downtrend. You've come up to the 18-week average and you're hanging here. I don't think that the tech stocks are going to be in favor for a very long time. I think that those are the stocks you've got to actually stay away from. They had their day. The market's backing away from them right now. I'd be cautious with that. Momentum trying to point a little bit to the upside here. You have to close over the 18-week average to get friendly. Hasn't done it. If it does, I'll change my opinion. I'm not there yet. In the Russell, I have no trend. The market's got a lower low, higher high, and each of the past 3 weeks, all it does is keep hitting the 18-week average. Don't know what to do with that. In the 30-year bond, it's an important move. You lost the embedded reading. What does that mean? The momentum of slow stochastics is this. If you get to periods where the market just starts locking in and staying under a 20 level, and you do it for several times or more, until the red line closes back over 20, actually I like the number 21, I'm in the bear camp. And what often happens is this with it. And I think you can see that the market was just falling apart as that was all taking place right through there. See that? Then you get to the pattern in here, and I'll show it to you. The market suddenly has an outside week to the upside. Momentum is still embedded, and now you lose it right through here. That is today. That to me means unless the market immediately, and immediate is this week, falls apart, right back down and gets that red line to go back under the 20 number, you've lost the embedded reading and the odds favor there's more short covering coming in the market. Is the market in a sell configuration? It is not. Is it in a configuration that short should be covered? Absolutely. That's what I teach in my enhanced Bollinger Band course. If you want to learn this technique, go on our website. And on the website, under the word education, it's all explained there in the enhanced Bollinger Band course. 10-year notes did the identical thing. You can see it there. I'll give you a secret. The 5-year did it too. When I look at the dollar index, coming down. So in the dollar index, we've been coming down fairly hard. I'm reading reports today, investing.com and some of the other areas, how firms are saying, oh, you're going to see the dollar's going to pivot back up from here, and this is going to prove to be the break lows. And they give all the reasons why. It's that the market has gotten ahead of itself with the Fed pivot. I agree with so much of what they're saying, but I don't think you're going back up to these highs. I think we have a problem. And I think the problem is the market has built in a top in the dollar. And I'm in that camp until the market can take those parts out or until I get a different chart formation. This is not a bullish formation. So throwing a dart and saying, I think this is it and here's why, it sounds great, but it's got to have more merit. Can the market get short covering and quickly get back to the 18-week average? Like that. But as a chartist, this is not a bull chart. This is a bear chart, and resistance should be seen up there. In the eurocurrency, time to cash in. You got up to the upper Bollinger Band. You're not embedded. So long. Again, that enhanced Bollinger Band course. Canadian dollar. This is one of those bear market rallies, and I'm going to show you. You lose the embedded reading right here. Now, you're embedded. You're still embedded. Are you embedded? You need a reading over 21 to end it. You lose it. Where should the market go? In theory, what I teach, and it works more often on the daily than the weekly, but it still has a lot of merit. It should make a challenge to the upside on the weekly, ideally the 18-week average of closes. It hit it. You tell me where it stopped. Now you've satisfied everything. So you'll say, well, what's the trend? The bias is down, momentum is up, the swing line's up. 2 out of 3 isn't the trend. You still have the market under the 18-week average. Japanese yen, again, the same pattern. You lost the embedded reading. You went to the 18-week average. You're hanging in here. Bank Governor Kuroda, and I wrote about this in my full research report. And by the way, I write twice daily full research reports, and I write them in a way that I hope you'd appreciate. I don't write pages. I write bullets, headlines, bullets, and a summation. Headlines, bullets, summation, short read. Ideally, a 2-minute read, but right to the point. I'll talk about the day's events, what they mean, the highlight of the day's events, and my take on what it means. And I did that today in the end because the yen has seen the best inflation it has seen in many years. But the bank governor said it's not real. It's imported inflation, but isn't everything in Japan imported? I mean, they're a big island, but it's imported inflation. And because they believe energy prices are going to sink back in other parts, they are still very much of the opinion a very soft policy on their currency is needed. We'll see. If he's right, and I'm talking the bank governor, then we should fail right here and reestablish bearishness on the charts. In Bitcoin, I'm impressed that Bitcoin didn't fall apart as much as some of the other markets. Now, it has fallen apart. Anyone that thinks you were up this year just about at $70,000 and you're now at $16,000 and they still like this investment, great. I saw that Kathy Woods has been buying these funds again. And again, she's a very long-term investor. She's done as well with her fund this year as Bitcoin has done. Look at the charts and they lay over each other. But I'm going to repeat, her style of investing is not for this year. It is not necessarily for next year. Her holdings are supposed to be holdings that will change the world. I don't think Bitcoin's going to change the world. So I'm disagreeing with her. I think she's just picked the bottom on a chart and she likes it at this point, okay? Not arguing that, and I'm not arguing with her. But Bitcoin, if it's going to change the world, it would have happened. A lot of the things that she did that gave her the glory years a couple of years ago, she did find things that made changes. When I come to WTI crude, I can see the argument right through here, where the market is just back and forth fighting between the two. A question on the live webinar is, what importance is it? Just gives me an idea which one's leading the other. It's not something I would trade off of. This is stuff I trade off of, and on the weekly chart, you're void of a trend. Now, what did happen is you had an embedded reading, you lost it, you went to the 18-week average, you stalled out, and that's all that you did. Got the story? Same thing happened here in WTI. No more than that. Now, would I want to be short at the 100-day average in the lower Bollinger Band? The exact opposite. I'd want to be covering shorts at those numbers. Is there a trend here? There isn't. You have higher highs and you have lower lows. Gasoline is trending to the downside. You can see it coming here, and in the Biden White House, they are jumping up and down. Unfortunately, the election is over, but fortunately, they had a great showing considering they were fighting the inflation story the whole time, and they won. They may not have won the House, but they won. They had a great showing. Let's say that. Republicans had a terrible showing. They did a poor job. Big shakeup needed in that party. In any case, as I look at the market, trend down, it was past tense, fighting its battle at the 100-day average. Unless it gets up right now over 274.01, the odds favor it's coming down for the next layer of 214 to 199.70. So you put it together, that's the game plan. I want to prove to you that what I do has merit. I want to give you something for free. I'd like to give you a couple of weeks of my full research. Now, let me explain it. My twice daily written updates, my weekend subscriber videos, my morning videos, both ETF and futures market, the whole array. 2 weeks free, no obligation. I don't want a credit card. You just come into the website, you sign up for the free offer, we'll get it to you, and you make up your mind, does this make sense to you? I think you'll find that it does. And I think you'll like what you see. And I'm going to have some crypto specials coming up in about 5 days. So you'd see this before the special comes and you can say, I do want something like that. I'd like to see it. How do you get all this? You just move your cursor to the top here for the special offers, sign up for my research and anything else you want on the website. We will get it to you. You'll get it after you sign up. You'll be in the system. You'll get a letter with your passcodes to come right in. Away you go. It can't be any easier than that. And again, we are not asking you for a credit card. Now, if you want to get our charting service, we're going to need certain information from you because the exchange demands that we have that information if they're going to give you quotes, because we're going to give you your mobile application. If you want to try our charting software with live quotes, we can do it. But the exchanges say they demand they know who you are to give you the free quotes, and they'll be live. I'm Ira Epstein. Just give it a click up here or go to our website, iraepstein.com. And when you get there, all you need to do is hit free offers. It's on the top left. Away you go. You have a great weekend.